What's up, ICT traders? Welcome back to the channel. I want to show you something very powerful in this video. Now, to many traders, they know exactly how to enter a trade, but exiting a trade has become a problem to many traders. All right. Now, this is what I mean if I say exiting a trade has become a problem to many traders. Now, look at this particular trade example. This is even a live trade I've taken already. Most traders will enter a trade. For example, let's say we have a trade entry like a breaker in this area, something like this. All right, like a breaker. If you have a shift in market structure like this, you obviously want to take the trade from the breaker because that is what the PD-ARRAY requires. But then immediately when price starts going up in your direction, or maybe you are targeting somewhere there, price starts going in your direction, it just turns from there and it removes you without you closing some of your profit. Or some people will even move their stop losses to break even before price remove them, and then price goes in their direction after removing them. I want to help you to overcome that in this particular video. And if that's what you are looking for, please help me click the like button on this video and help comment thank you so that other people can see this particular video. So let me show you how to go about it in a proper and a professional manner. So let's assume you have a trade. This is the trade right here. I want to show you in detail. I took the trade actually here from my MT4. I did my analysis on TradingView as usual. Now my target is going to be this guy, this draw on liquidity here. All right. But while that is happening, as it is now, I've already moved my stop loss to break even, because the way I do my break even is that if I enter from this bearish breaker and price moves to create a break of structure, this is a break of structure, BOS. This is a market structure. The first break of structure is where I will shift my stop loss to break even here. Boom. So that I will close it, because I'm very sure that if price have closed below here, that is a break of structure, it will be difficult for price to come back and remove me at break even. So that's the simple logic of how to do it. Now, the same way I have entered this trade, that is the same way I will exit. That is exactly what I want to show you. Now, look at the way I entered this trade. I was watching this on the 15 minutes. I want to show you in detail. Look at what happened. This is what ICT calls the market makers sell model, right? All you need to do is to carefully wait for price to go to a particular level, something like this. Boom. Can you see it? This is it. Price have swept buy side liquidity. That is exactly what I wanted to tell you. Buy side liquidity has been cleared. Immediately, if price cleared buy side liquidity, or if price cleared sell side liquidity, the next thing you will look for is a shift in market structure on the lower time frame. Now, I am seeing this liquidity sweep on the 15-minute time frame, but then the shift in market structure here will be coming from the lower time frame, maybe a 5-minute time frame, or even the 3-minute time frame. So on the 3-minute time frame or the 5-minute, whichever one you want to use, let me show you right here. All right, but I was watching it actually from the 3-minute time frame. I saw that price shifted structure. Do you know what this shifting structure actually means? It actually means that the bullish movement is going to end from this area. All right, the bullish movement has ended rather from this area. And in other way, I can literally see that this has been a bullish movement. Is that not a bullish movement? Break of structure bullish. And it ensures continuation of trend. Break of structure, break of structure. This is trend continuation every time I have break of structure. So when I have the shift in market structure, it means the bullish movement is going to change to bearish. That is as simple as that. All right. So after a shift in market structure, two things will be rightly given to you. One, you will either have a breaker block or a mitigation block for an entry. Check your chart. Every time you have a shift in market structure, price will give you either a breaker block or a mitigation block rightly placed for you. So this is a breaker block. Why? Because price actually went ahead and cleared this liquidity with just the wick. Whether the wick or the body, we still consider it as a breaker, because in this kind of situation, we have a higher high formation before it crashed. It left you with this guy, and that was when I took the trade for the sell. Now, I will follow this chart as it keeps going low, low, low. If it never comes to my take profit, for example, now here is the most important thing you must take. For example, I am selling from here, right? My stop loss is above here and my target is here. All right. If I want to take profit, if I want price to reach my TP, now that I have moved my stop loss to break even, the next thing I should be doing is to follow the rhythm of the market. Just like this one was going bullish. Anytime I see a shift in market structure again, after price have cleared a liquidity or price have traded into a significant level like this one, this is a bullish order block. If price is going to turn around from here, I will see a shift in market structure bullish. That means I can close my trade because right now I am in danger. Hardly will price not go back to my entry. So those of you who will sit back and be watching price, when you see this sign, especially if you are trading intraday, daily traders, you should be careful. When price has swept liquidity or has done something significantly, you see a shift in market structure as price was moving, exit, pick your money and walk away. Sometimes price may not come here, but as price was moving, look at this, price kept moving up to this area. And that was what happened. Let me show you another one. These guys, look at these guys that we're looking at this. This was a shift in market structure, probably. All right. Even though this was too early. Okay. This was shift in market structure. If somebody took it from here, he was following it when price shifted structure here. Let me show you. Instead of the guy to pick the little money he has, maybe he has broken even to taking his entry to break even here. All right, let me put the correct entry probably here. I'm just giving an example anyway. If your entry was here and your stop loss somewhere maybe around here, because here is not rational, somewhere around here. As price came here, when he saw the shift in market structure bearish, he should have closed this because by now this thing is like that. He would have closed with some little profit, but then he didn't close like that. He allowed price to what? Come back and remove him at break even before it went in his direction. So anytime I see a shift in market structure like this, as price is going in my direction, I do what? I will quickly exit the trade and lose than to lose the money or to give back the money. This is almost how many pips? Let's see. This is like 16 pips price movement. But as far as price did not shift structure, I will just be patient with it. Just be following it as it plays out. All right. So that is one of the easiest ways to exit a trade. I hope this particular video helps someone to become a better trader. And if you have any question, let me know in the comments. I will be right there to respond to you as a professional trader. All right. So go ahead and try it every time you take a trade, regardless of the time frame, and then see how powerful it is. For those of you who are joining us for the first time, you have this channel as ICT for beginners. You can watch all the videos are right here. If you go to the playlist, there are videos classified based on the level you are currently, ICT Core Basics Intermediate and the advanced level. Thank you very much guys for watching. See you in our next video.